Hello everyone, here's our presentation. Next page. Firstly, our investment idea is divided into two parts, growth mix and robust combination strategy. For growth mix, we plan to open positions for AAPL at current price of $280 and have additional positions when the price went to $260, targeting the stop profit of $330 and stop loss of $250. As to BTC, we intended to line position in intervention at the current price of 95,000, targeting the stop profit of 120,000 and stop profit of 80,000. In addition, we also follow the rebalancing rules, ensuring that the proportion of AAPL would not be exceed 60% and BTC does not exceed 40%. For the other strategy, we brought treasury bonds when it was at $1,000.954, closing to par and with ample liquidity and aim to hold until maturity. While for GLD, we opened a position at the current price of $275, planning to partially stop the profit if gold breaks $285 and stop lose below 255. In general, we allocated our investment of AAPL, BTC, Treasury bonds, and GLD at the ratio of 60 to 70%, 30 to 40%, 50 to 60%, and 40 to 50% respectively. Next page. For reason of investment, we own AAPL stock the most because we were bullish on the company, believing Apple will continue to outperform expectation over the long term. Apple's market response after the launch of new products has increased consumers' new confidence in its innovation ability. Macroscopically, the U.S. Economy grows continuously with an unabated consumption power. In addition, with the general improvement and application maturity of the AI model, the next improvement stage of the direction of it will be edge AI without limiting to infrastructure construction. Therefore, as to the absolute global leader of the high-tech industry, Apple's irreplaceable status in the field of edge AI development is another important reason for our selection. As for Bitcoin, we believe that Bitcoin, with its typical high volatility, may naturally become the trading part of the portfolio. The reasons for choosing treasury bonds and gold are relatively simple. U.S. Treasuries are the classic stable income factors in the portfolio, while gold is also the typical safe haven asset. We choose Treasury bonds and gold as stabilizing factors in the mix to balance volatility and protect returns facing the increasingly unstable factors globally. Next page.
Okay, next part is recommended configuration logic. For growth mix, we focus on Apple and BTC. We estimate that target annualized return is between 20 to 30%, and volatility is between 25 to 35%. As for Apple, one of the fundamental advantages is Apple's profitability mode, which is 25% of revenue from services in 2024, and its 44% gross margin makes it remain the industry leader. Also, its product's innovation cycle gives people confidence. Last is Apple's shareholder return. 0.8% dividend yield increases $90 billion buyback program, which supports long-term upside in stock price. As for Apple's technical signal, shares break above $280 resistance. MACD gold cross confirms uptrend. Short-term target is $300, increased by 12%. Our another attention is Bitcoin. High risk and high reward attributes a lot. There is market sentiment driven, such as cash ETF inflows, which draw prices higher. An anti-inflation narrative is also a contributor. Next, for robust combination, we focus on national debt and GLD. We recommend 6% US bond because it provides stable income. Its fixed coupon provides stable cash flow and guaranteed maturity is without default risk. We can use this bond to do interest rate risk hedging. Its short duration characteristic makes it limit to the impact of the Federal Reserve policy. Next recommendation is SPDR Gold Shares ETF. It has dual attributes of risk aversion and inflation resistance. There's geopolitical hedging. Escalating conflict in the Middle East pushed gold price and GLD price up. Meanwhile, real interest rates are down. The Fed is on hold, and the cost of holding gold is lower. There's also technical support. GLD breaks out of the ascending triangle pattern with a short-term target of $290 and a long-term target of $320, which increased by 5.5% and 16% respectively. Okay, that's the end of our presentation of investment portfolio. Thank you.